ProfessionalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Brief. Happy Friday, I think, right? It's today Friday? I think it is. Such a scatterbrained period here right now. Let's see what we got here. Friday the 19th. Ooh, triple witching. Didn't even realize it was options expiry here today. So big monthly options expiry. What a surprise. The market moves a huge ton on the Thursday. If you don't know this, right out of the gate, we'll give you some value here for all you longtime listeners, first-time callers. Usually the rule is that they do most of the options business on the Thursday, and then Friday itself is actually usually a pretty quiet day. Man, just tons of stuff happening all over the market here. You know, I get the distinct impression that maybe the public was encouraged to panic a little bit there yesterday and last night, especially after the close. And I don't think it was actually in their best interest to panic and dump. And unfortunately, when we look at the price charts, I think it makes a lot of sense why the public was encouraged to panic dump and panic sell. And unfortunately, I think they walked into a trap. But anyway, it is what it is. Also, too, I mean, there's just so much to talk about. I could literally spend 2-3 hours just talking with you all here on the YouTube page, but we are going to try and crisp this up and at least stay within shorter time frames. So as you can see, I think let's maybe officially call it maybe 9:05 or so we started. I think I've been talking for a couple minutes here. So let's try and have this public show wound up by this, let's say close to the bottom half of the hour. At the 15-minute mark, probably Chris will come in and remind me to stay on track, which I think generally is a good idea. And then in the after party, I don't think we have any special guests. Chris, do we have any special guests today? I don't think we do. I don't know if he's there or not. Anyway. All right, so there's probably about 20 different things that we could review and talk about, including options expiry. As well, too, I do notice that a lot of, which I find fascinating, I don't know whether, and of course, with us in the public, we never will know, whether Mr. Fink's portfolio, a couple months ago, 2 or 3 months ago, they put out like sort of, BlackRock's core holdings, man, all of them one by one are all getting taken apart. And there's a couple on his list today that just look like they've got disaster written all over them. But the problem is, of course, is that they've run this market up so much that we could easily just go right back down to last October lows. The public will be encouraged to think that the stock market is crashing. But in reality, I mean, almost every market prognosticator that I talked to or listened to or whatever was kind of like 22% in 6 months. That's a bit ridiculous with regard to sort of upside price performance on things like the S&P 500. And frankly speaking, I agree with them, and I wouldn't be surprised. I mean, this is a classic hallmark of a blow off top, folks. They always say if you want to take the market down, what do you do first? There's another awesome little tidbit for you. If especially like our sort of core people, especially like Norway over there on the YouTube page, Glass Insights over here on the hangout and stuff. I mean, you guys are here day in, day out trying to learn, and every once in a while I drop tidbits. This, I think, is an excellent anecdote, just an absolutely perfect anecdote of what if you want to take the market down, what do you do first? Ironically enough, what you do first is you actually take it up in a very parabolic fashion. Like I said, I mean, the stock market, I mean, this is like literally the entire US economy, if you will, the S&P 500, all that kind of talk. And from a guy who's played this game a very, very long time, 6 months, and you get look at it's right off the damn screen. You get 30% move in the S&P 500 in a 6-month window. I mean, if anything, folks, this is historic. You take a screenshot of that. My hunch is you're probably never going to see this again in the rest of your life, where the stock market moves this kind of move in such a short period of time. And if anything, I hate to say it, but this is a warning unto itself. Actually, I had the privilege. I was super stoked. And actually, while the person was talking through the video, they even mentioned that, holy crap, I can't believe how many people are subscribing to our channel and all this kind of fun stuff. This gentleman's broadcast, and he's a chartered market technician, which I'm kind of thinking, maybe I should get off my ass and just get that damn designation done and get it over with. But he's a CMT, and he has sort of like a video that he does regularly, 5 charts for you to review kind of idea. And he even snuck in a couple extra charts for good measure. Great broadcast. And I would strongly suggest all of you to watch this if you have the moment. Beautiful broadcast. Very, very well done, sirs. Hit the like button, subscribe, the whole damn thing. This guy is definitely worth listening to, in my humble opinion. And one of the screenshots that he shows, and this is a concept that we teach at TRI, Dow theory, Charles Henry Dow, co-founder of the Dow Jones Industrial Average, first editor of the Wall Street Journal, guy we probably should respect and listen to. Well, I think so. Dow theory itself, any kind of move that you see in the broader market should be confirmed by the transports. And ironically enough, what we're seeing out of the transports is a complete and utter disconnect and huge, divergence along with technical breakdowns. And of course, you've heard me ranting and raving about the energy market recently. So, the interesting thing about the market here is that I don't necessarily think that crypto and its technical breakdown here, because we have done some serious damage here to things like the Bitcoin chart. I don't think that this is isolated. And in actual fact, one study that he did, I was even mentioning before I got the broadcast going, there's one study that he actually follows that basically is saying that we're in a secular bear now till probably like 2040 or something. And frankly speaking, that wouldn't surprise me. One interesting tell the other day, for whatever it's worth, I have a good portion of my net worth and all of the money that I've saved for Liam to try and buy a house for him. You all know the story. Sitting in T-bills and short-term money market funds. And I had somebody the other day go, "Aren't you invested? Don't you invest? Don't you invest?" And I was like, the Fed's down in the States give me 5.5% on my money. That's guaranteed. That's a pretty damn attractive yield. And actually interesting, somebody just mentioned there, no greed cycle. Well, I mean, the issue here is, I'm more than happy to be a stock owner, but in the face of that, I mean, it's interesting. I had said just a few minutes ago that I think that the public was encouraged to panic, and interesting how we're basically sitting right at 50% of the trading range since the end of the year lows there and beginning of the new year. I wouldn't be surprised if there's a nice technical bounce here. And I even mentioned it in tweets and stuff that I got the feeling, especially yesterday, because it made no sense. People were actually dumping and selling Bitcoin down here at the lows. And, for whatever it's worth, folks, and I don't hear anybody talking about this, and especially not people like Gucci sweater wearers and all that kind of stuff. I mean, this literally is like a 20% correction in the Bitcoin price here on the spot market. I'm just eyeballing this. 19% correction. You would have been selling Bitcoins almost 20% off of the highs there if you panic sold into that dump yesterday. Which, that's just not wise. I mean, if you're trying to sell tops, here's another tidbit for you if you're just watching this. Number one, are you going to really sell ahead of this big fundamental event? I mean, gee whiz, it's finally come. This is not yet, you're not supposed to sell ahead of the event. If anything, you're supposed to sell after the event. So Chris was telling me that the Halving event now has been sped forward to sometime this evening. Is that correct, Chris? You said this evening? I thought it was going to be 4:20, and that would have
Yeah,
been
I seen it last night when I was at the airport with the guy that I was flying back here with. He's a really big orange pill guy. He had the block time. It was around I think 7:30 my time, 9:30-ish Eastern.
all
That's gonna
right.
happen. So
So 56 blocks to go, says Cotter. I don't think it made a lot of sense to panic sell into that event last night. Just as the same as I don't think it made a lot of sense to panic sell the stock market into those absolute panic lows last night. I might even argue that, if you are trading this market, we probably, if we even look at something like, I don't know, let's say even a 4-hour chart, you're probably going to get some sort of pivot back up top just to do nothing more than just come back to trendline resistance. So I just didn't make sense to dump and panic into that event. And as I'd said to sort of start the broadcast off here a few minutes ago, this I think was all about the options expiry. And the gentleman that I made reference to his podcast there, he actually made a really cool reference to the skew and options expiry. I don't know whether we have time today, but I wouldn't mind looking at the volatility index and the volatility skew. I mean, that was a really, really good study. And the bottom line there is bottom line. I don't know if it's bottom line or not, but it feels as though the public was encouraged to panic into that dump overnight. And, I've said it before, I'm kind of scratching my head. The guy who's actually the House of Representatives leader down in the States, I mean, he's been constantly, no new money for Ukraine. Screw you, screw you, screw you. And then all of a sudden, something happened and the market turned and it started to break in earnest here. I have a feeling it had everything to do with interest rates. And then all of a sudden he just changed his tune, and now he's like, all right, yeah, let's give Ukraine all the money they want. Hey, here's 60 billion for you and 30 billion for you and 10 billion for you. And sooner or later we're going to start talking about some real money, eh? And interestingly, on that event, I don't know whether this US dollar is done its move up here. I still think we have a couple AB equals CD objectives just up top here. And you start looking at this US dollar, which is sort of like the ultimate fear proxy in the marketplace, that kind of talk. And it sure has come an awful long way here, eh? So I'm just wondering, if we do go and M out here, that will probably open the window for a pretty respectable pullback in the greenback, which would mean that we'd probably see a rally in international currencies, which would mean we're probably going to see a rally in the stock market, and probably do nothing more than just get us out of this shorting zone and back up into reload short zones. And then at that point, we're probably here, oh, actually, we need to be a little more fiscally austere and, blah, blah, blah. You know how the story goes. So, but if you're going to short the stock market, I think you want to short up here, not down here. That just doesn't make any sense at all. So, fascinating how all of this is happening in the light of basically no real new economic drivers. Well, I don't know whether you know or don't. If you're a new viewer, you don't, but if you're a longtime viewer, You know that I always like to frame these public conversations with you people with sort of what the hell's going on in the news today. And oh, by the way, there's nothing going on in the news today. So you can't make the argument that any of this is being driven by economic fundamentals. This is and what a surprise 7:30 here. We got these damn Fed speakers coming out and talking. I still think these central banksters are talking way too much. They're never right. Thank you, sir. Thank you, Chris. Um, they're very rarely, quote unquote, right about sort of predicting what's going to happen in the future. And I don't know. I'm getting the feeling, of course, if you think Klaus, great reset, they've got to pull off this massive con job about the hyperinflation of the money supply. Add a zero onto the end of all your prices. Let's see if we can just con the public into accepting this and basically just accepting a massive theft of a generation's wealth. Trying to stay positive though. So, let's use this information against these people since we know what it is and we know what reality is. Just try not to get suckered into the sort of public speak. Actually, that's one thing I didn't touch on here this morning. I've been talking. There's, like I said, there was just so many things that happened here overnight that I just don't even know where to begin. And one thing I did want to try and do is, have sort of positive affirmations for this conversation with you. And actually, our TRI team even put together a bunch. Just special shout outs to Josh. He's such a nice, positive guy. But maybe we'll start off the after party with something like that. So point of the matter here is this isn't being driven by economics. This is really being driven by, options expiry. Where does the 1% want the market to move to so that they maximize their profits? And I wouldn't even be surprised that they waited for the market to finish and everything for that military response from Israel. And really, should anybody have not expected them to do that? I mean, this is tit for tat. And I think you could actually make the argument now that basically Iran and Israel are basically openly at war. The irony of it all is that I think Israel is way overgunned, and the what do you call it? Well, the Iranians, they're being made to look like fools. They fire like 500 missiles out of Israel and not a single one gets through. I think maybe I think a couple people were injured by falling debris or something. And then Israel launches like one missile after Iran and blows up one of their cities. So, and really, this is exactly what everybody should have expected. I don't see any reason why anything is shocking here. And if anything, this should be a message to Russia. Are you really sure you want to pick a fight with the West? I mean, are you really sure? If anything, Russia. Okay, let's not go down that road. But anyway, point here is China. I think a lot of people got emotionally triggered last night, and let's finish off this free broadcast with a quick boo at things like crypto. I don't think it was a good idea for you to get too wrapped up in doing anything around this big fundamental event. I don't think you should have done through these fundamental events. If you didn't sell the top and you didn't short reload zones, well, you missed the trade. Coming in, and this is a reload long zone, folks, not a reload short zone, long zone. I don't necessarily think it's a good idea to buy Bitcoins here, but I definitely think that if for the traders out there, this is a very well-established trading range. And we're just banging around in the range. And my hunch is they're probably going to take this thing right back up top. I think if I looked at the futures, the overnight double bottom that was put in here, I mean, it was sloppier than slop. But what's fascinating about this double bottom is if you believe this W, this is kind of questionable because this low is just slightly lower, 59,595, and this low 59.7. So it is technically lower, but clothesline basis, we didn't breach that level. if, and I don't necessarily think it's the case, but if this is some sort of bottom, well, look where the 2.618, the foggy buggy, that's sort of our first bifurcation target. Look where it comes in, right back up at where the previous top was. That shouldn't surprise anybody at all. This short that we put on about a week or so ago, I think that was a week, maybe it was a little bit longer. There's no reason to touch this. And I don't know whether this is for real. It's a bit skeptical because this low is lower. But you know, if the runner portion, if it's fated that it's going to get stopped out at scratch, well, so be it. This is a trader's life, right? You are paid to worry. The interesting thing about this trade, though, is you're in a very, very powerful position. The market has to have a monster rally for you to get out of this position. Frankly speaking, I don't think it's going to happen, but we'll see. You know, only time will tell. My hunch is, and this has been my message all along with Bitcoin, and actually I did up a chart which I think really perfectly illustrates this. I had to redraw this because, you know, me and silly Brian and his computers. I swear. I think the theme of 2024 is Brian is like literally fighting with the computers, which is never a good sign. We need Sjord back here to get the site back on track. And of course, he's so smart at computers. I just want to lean on him. But my message all along here is I think that this happening and the whole cycle is actually very, very similar to the 2015-16 cycle. And so, you know, oh, what a surprise. We topped about a month or so. In this case, it was about a month and a half ahead of the happening event. We dumped, caught everybody, of course, off guard. Gucci sweater guys, other people saying this time it's different and stuff. You know, I think all those people, they got schooled here. Then we rallied back up to the top end of the range. I'm getting a warning here from YouTube, Chris. How are things looking on your end? All right. Rallied back up to the top end of the range. Then we waffled around, actually emmed out. Are we over here? This was the happening. It actually looks pretty similar. And really what I would expect here now following this happening is actually a period where crypto goes very, very quiet. And very much like the stock market, I could very easily see we have dead cat bounces, counter trend rallies, back to reload zones, back to trend lines, back to moving average resistance, right? Things actually calm down quite a bit. It was interesting. Our celestial guru, Cole, told us that we had a massive celestial event that just happened. I don't know how long that persists, but what a surprise. Big fair in the Middle East. And of course, that's basically the theme of this celestial event with Jupiter and Mars and all that. If they get stopped out at scratch, so be it. But if we start getting new M's, then we'll start exploring that short side again. I actually think that there are opportunities in other places in crypto. I don't know whether really Bitcoin's the place we want to focus. You know, things like Solana. This is, I think, was like the darling story of this current crypto cycle. And, you know, we'll probably look at things like render and stuff like that in the after party. But we'll finish off this free video just with this kind of conversation. I get the impression that really all they did, I mean, keep in mind, this Solana chart, and I put a tweet on it, question is, I don't know which tab I have it on here. Is it this one? Yeah, over here. A lot of these little piece of poo names in crypto actually probably going to start bottoming out here. I actually think, believe it or not, that, and actually we had one gentleman who I think is incredibly intelligent in the Solana space, Dan, who was actually pointing out that there are some Solana names that the smart money, all that kind of stuff, they're coming in hard on the buy side here. And it doesn't surprise me. You know, I've shown you this chart repeatedly. I think I drew it up basically like about a month or so ago. Technical breakdowns, M's, market smiling at you. There's going to be trouble. And sure enough, boom, down we go. Reload zones off of this huge tail. Wicks and tails like to be eaten. Candle body lows or trade location that in reload zones, especially on that huge tail. And lo and behold, look at the message that we're getting out of our RSI study. Bears, you better cool your jets. It's not necessarily a buy signal outright. And I might argue if you draw downtrend lines off of the Solana chart, we really won't see a trending signal out of Solana until we actually start Wing out on the other side of that downtrend line. But what I would say is, for those people that are shopping within the Solana space, makes perfect sense that, this was fluffy stupidity, right? And 52% rally off of just this tail low here. I mean, 52%, correction, sorry. I mean, that's insane, huge price swings here. The people that were going to get destroyed have been destroyed. And now I would not be surprised, especially, these cute little uptrend lines here. I would not be surprised. And if we draw downtrend lines, the resistance levels somewhere up here, I would not be surprised if we actually go through a window here, following the Bitcoin halving event. Everybody's sort of like, okay, well, that's it for Bitcoin. There's not really much more to do there. Bitcoin kind of just goes sideways up top here. And you actually have a pretty smart rally, counter trend rally in the altcoin space. So get ready, folks. Again, reload long zones, right? Do you listen to any of the stuff that I'm trying to bark at you, trying to teach you how institutional players look at these markets? Was it a good idea to get panicky and sell into these lows? Probably not. And now we're actually, things like RSI studies that I've kind of described to the public. And hopefully you guys have learned from this. But teal, our first W here, is explicitly a bears, you better cool your jets. And I think that's the general message here out of the market right now. And just don't, number one, don't get sucked into the emotional responses. That means that when we go face rip up and people are like, this is different, don't get sucked into that. Liz and Jimmy, this is message for you. And now, most of the space is pretty sanguine right now. Maybe we need to start hunting W's. And, especially if you like to play the Schultcoin space, man, hunt those setups. Because I think a lot of the negativity and all of the danger, 50% haircut to your capital, oh, that sucks if I came in and bought this crazy ass peak up here. And keep in mind, you can see all the trap bears up there. They're sitting up there begging to be released. Well, I think your rally window here now starts. Just remember, there are a bunch of trap bears. You can see how these trap bears got released. There are a bunch of trap bears in this tail here. So don't be surprised if this is back and forth, back and forth. But I actually think once we get beyond the Bitcoin halving event and that space kind of goes quiet, probably next week following the options expiry here today, probably going to enjoy a relatively friendly market state going forward here for the next little bit. Okay, why don't we leave the free broadcast at that? Sure hope you got some value out of it. PMA for the win. Slow and steady wins a race. Don't take no win nickels. Remember what your number one job is? All the best. The only thing left for Brian to say to you good people is bye for now.